Hello and welcome. You're watching Money, Money, Money. I'm Sumera Abdi. Ultra high net worth individuals in India today account for over 1 lakh of our 1.25 billion population. In fact, some estimates say that by 2018, their combined wealth could touch 380 lakh crore rupees. Now, some of this incremental wealth creation is going to come because of the pickup that we're seeing on the ground in terms of investment into industry, manufacturing, and the push being given by the new government. But a lot of this is also going to come because of prudent financial planning and wealth management. So what are the instruments that are going to drive this wealth creation, and how do you protect your assets? We're going to ask Anshu Kapoor, who's the head of wealth management at Edelweiss. We also have KK Mishra, MD and CEO of Tata AIG General Insurance. And joining in today to give us a first-hand account of how different the needs of the HNI really are, we have with us Prudent Jajodia, President and Executive Director of the Warden Group. Thanks so much, gentlemen, for being a part of our show. In fact, Prudent, I want to begin with you. You know, we've seen the last few years which have been a bit of a drag, you can say, but things are picking up now. Do you think your investment philosophy over the last few years and now, do you see any change in it?
Definitely, I think sentiments have improved, and there is going to be a complete change in asset allocation approach from a debt-heavy portfolio to maybe more equity now.
All right, so you're ready to overhaul things.
I think so. I'm willing to take that bet now, you know, with the comfort that I have a stable government in the center who's pro-capitalist, and is already, we can see some moves from the government in the last 3 months that are very positive for the industry and for the country. I think I'm willing to put my money where my mouth is.
All right, and Anshu, but tell us, he's willing to put up his money, change his asset allocation, but would it be very different from that if another, say just another retail investor, or is it just that his, the amount he's putting up is just exponentially more?
It's not only about the amount of money or capital that he is going to invest. The needs are very different, Sumera. For example, a retail investor, it's more about cash flow management. Financial planning is what we call it. So income, expenses and goals. How do you get there? And you draw up a plan. For an investor like him, it's a lot more about asset classes that are available, amount of concentration, liquidity, complexity, risk management. So it's not only about cash flow management. So the avenues that are available and the decisions that he can perhaps take are very, very varied.
All right, and Mr. Mishra, like Anshu says, that products have to be tailored to the HNI. Can insurance really get that personalized? I mean, what is it that you can offer your HNI client that you're not offering anyone else?
Well, HNI believes that he should not be hassled with the fine prints or details. So it's more to do with their lifestyle, it's more to do with their worth, and more to do with what type of investment they have done other than what they call about equity and all. But you know, most of the HNIs, they invest in art, they invest in jewelry, they invest in yacht, they invest in Boeings. So it all depends what type of investment they are doing. And we are there because I can't replace the sentimental value, I can't replace their intrinsic value, but what I can replace that if, God forbidding, something goes wrong, can I have the same type of painter, same type of painting available in the market? We do that.
All right, I'm sure that's touching a chord with many people out there. But Prudent, I only heard you say debt and equity, and now Mr. Mishra has raised, art, wine, I don't know what else, yachts. Would you be willing to bet on all of those things now?
Well, some of the items he's mentioned are depreciating assets, and some of them are appreciating, like art, for example. A yacht and a Boeing, I don't know if that's an investment, a prudent investment or not, but from the art point of view, I think I've been thinking about it for a long time now. But I haven't really got the courage to go ahead and invest anything in art, simply, I think, because I don't understand that enough. So I'm definitely open to it. It's an asset class that I want to add to my portfolio. In fact, we're doing a lot more than just debt and equity. We're doing some real estate, we're doing distressed assets, we're doing some other stuff as well, exotic stuff as well.
That's quite honest, actually. But Anshu, have you ever had to turn down people who said that, I want to buy this exorbitantly expensive painting or a yacht? Do you ever turn people down and say that, don't go for it?
Several times. I think when markets are good, all of us tend to get carried away a little bit. And all of these items that Mr. Ji mentioned, there is a demand for that. In fact, if I remember 2006-07, some of the global investors would invest in a luxury and lifestyle index. There was actually an index created of constituents which were like luxury and lifestyle. So these things do come in vogue, but as wealth managers or advisors, I think it's our job to protect as well as to grow. So we have to be cautious whether the expertise is available or not.
But also, Pradyumna mentioned that he's investing in stressed assets. Is that really an investment?
It is a financial investment. It is not a business decision. It is a financial investment. See, ultra high net worth individuals are now exposed. Distressed assets globally is a very, very large asset class. And there's an opportunity in India, given the amount of stress that's on banks' balance sheets. There is a little bit of incentive for them to move these assets away, and there is a regulated mechanism of asset reconstruction companies to come in and buy those assets. So there's not enough capital available, but returns are still there. So it's a well-considered decision, and those products are now available.
Okay, and while we're on the subject of all that is lavish and fancy, Mr. Mishra, how does something like this actually get insured? How do you calculate a premium on it? How do you put, value on things which don't have, intrinsic value, maybe very different from what their real value is?
Well, to be honest, first thing is when we enter with such contracts and we meet people like Pradyumna, we always look at what's his background and what he is investing and where he is investing. And then there are valuers available in Mumbai, Delhi, Calcutta. There are valuers available for all these things. Okay, it's a very niche market, so they are not publicly known, but we know them. And when we enter, first thing we do that the value which my customer is telling, is it the right or not the right one? So the valuer itself is to be agreed together, and then the value which comes, we agree. It's more known as the agreed value. But God forbid, we have been in this business for 5 years. Most of the clients are not public, and there have been claims, and there has never been any hassle on this.
If there was a claim, what would be the procedure? I mean, would it be a normal go to the police station? Because I don't think HNIs would want to be...
Not at all, not at all. Because I said that is more of an agreed value policy. We agree to certain terms and conditions in the contract itself, and we abide by that. There is no question of asking question, why did you lose a diamond ring? If somebody has lost, somebody has lost, because we know that there was a diamond ring. We know that it was a normal wear. We know these things do happen. But again, I'm again mentioning very clearly, this has to be taken care at the time of insurance, not at the time of claim.
Now, I'm sure, as is with most HNI families, you have a lot of property or land that you've inherited. Would you still consider making fresh bets into, commercial real estate, or would you look at, buying more residential property?
I think that would mostly be driven by the market conditions in both space, I think. See, Resi in India has always done quite well. In fact, it's a safer bet to play between the Resi and commercial. Having said that, I personally believe that the commercial market in India will grow faster than the residential market going forward, simply because I think it's been beaten down quite a bit. And India is unique in the sense that the commercial market is trading at a deep discount to Resi, which is not the case in London, Hong Kong, New York, or any of the developed markets, I think. So there is a catch-up to be done on the commercial side. Going back to the question about inheritance land vis-a-vis investing more, I think inheritance land, unless there is vacant land that can be developed into commercial or residential and monetized, one should look at adding some real estate in their portfolio. I think it's a good, steady, especially if it's income yielding, like a pre-leased asset, for example. It gives you a steady income of 7-8% a year, plus the 5-7% capital appreciation that one expects the property prices to go up every year. So I think it is prudent to have some real estate in your portfolio. I think Anshu will be adding more value to that question, and maybe he can give his thoughts as a banker.
Yeah, absolutely. I do agree with the investment thesis. See, commercial real estate today in India is lying buying nifty pre-May 16th levels. So the appreciation has still not taken place because there's still some amount of supply overhang. Till that gets sorted out, there will be good opportunities available in the commercial real estate market. That is one. The other big factor that will influence the prices is the REITs regulation. So as more and more foreign funds come into the real estate sector through REITs, there is likely to be a yield compression, which will result in the prices going up.
All right, so on that note, what we'll do is take a very quick break, but we're not done just yet. When we return, we're going to tell you how HNIs do their estate planning and what are the factors that they need to keep in mind. Stay with us. We'll be back in just a bit.